All right. Good morning, everyone, or afternoon, depending where you are. This is our free demo and how to place options trades. I am filling today for John Voss. He is out today. Maybe it's the snow that came through that area in Cincinnati. I know it shuts down the city. I lived there for 4.5 years myself. I am trading from home. Uh, and I am located up in northern Minnesota, actually, right now, near my family. So we deal with snow all the time, so not a problem for us. But it can definitely be for those that are in Cincinnati. So um, I am here, and it's honestly a privilege to be here with all of you to walk you through how to place a trade. If you do have any questions, please just put them in the chat. I do have the audience chat up, so I will be able to see your messages. For me, I came from a traditional background in managing assets. I worked for an RIA. I was actually a partner and portfolio manager. I should probably tell you my name if I didn't already. It's Matthew Timpane, and I am a senior market strategist at Schaeffer's and a chartered market technician. But to get back to traditional asset management, um, for me, the reason why I even joined this industry was to help people that were beginners, right? How to place a trade, how to trade your portfolio when it's smaller. I saw a big service there, so it's honestly a privilege to just help you out. I will try to keep this as low level as possible for those of you that are just learning how to place a trade. And what we'll do is we'll go over this week's in the money trades. We'll do a couple of them and show you how to place it within a brokerage platform. I might use two different ones just so that in case you have a different one, just so you get an idea. It's all similar and all the same, but each one obviously looks a little bit different than each other. So let's just put the screen up here for everyone. All right. We're going to share the entire screen. All right, perfect. Sorry about the wait there. All right. So let's just go over one of the trades. So right here we have Lee Automotive. The recommendations come out just like this. For some reason, it is not showing this. So let me retry to share that. I apologize. Entire screen was not sharing, so we might have to hop back and forth here, but that's not a problem. Um, all right, so you have Lee Automotive here. We have our technical observations or our trade drivers and our sentiment observations that come out right on the charts themselves. So we talk about what we're seeing in the markets, and then we have the recommendation right here. So buy Lee Auto, the 110, 23 and a half straight call. And we have a target profit of 150%. And then we have an OEZ. So that is the expected optimal entry range, right? So that's the optimal entry zone for us. So that's from $23.50 to $25.50. As you can see, it's still trading within that optimal zone. The reason why we put these on there is, say Lee Auto, opened up this morning at $20, right? So it gapped down, had this huge gap down. We really don't want you getting in that 23 and a half straight call when it's that far outside of the OEZ. So when it's outside of the optimal entry zone, it's not to say don't get in. If it's close to the optimal entry zone, you can still feel free to get into the position. So say it was trading down here at 23.15, 23.25, that's definitely acceptable. We're looking for really kind of what we call true range, just an ATR. And I'm going to shut this off as well. Stop the camera so you can see the whole screen. But we're looking for a move that is way outside of that OEZ. So, within, in this very, very acceptable within 1-2% of that lower bound on that OEZ, we would still want you to get into that. Same with the upside as well. So we're still within it. As you can see, we were recommending a 23 and a half straight call option. The reason why is we kind of have all of these moving averages here acting as support. We have a bullish trend starting, and we have this little base here. So we think within a 5-day period, this could easily trade up to this 1-year volume point of control. And that would be 150% on your option. So let's just see how we can set this up. and I will pop up the next window here for us to share. And I'm going to have to kind of go back and forth. So I do apologize. For some reason, it is not populating on the entire screen. So as you can see here, we have one of our menus. We have, this is Tasty Trade. We can see here Lee Automotive. We're going to want to enter this. And right here, you'll come down. You have all your strike prices right here. You have your bid and your ask to buy. All these extras here are things that we focus on. But if you're a beginner, that's why you're with us. You know, you're just looking for some of the trade recommendations as you learn how to trade. So just kind of focus on what strike we're giving you, and then you're able to buy it. So simply for Tasty Trade, you just kind of click on it. It will populate this window down here. So you'll see that the bid is 86 cents. The ask is 90 cents. When you want to buy this, you can look at it from, I'll have to clear this up because I did have another trade in. So hit the ask. It usually comes up as a market order for most brokers. I would suggest go to the limit order because you don't want to just take the market order itself. So as you can see here, the midpoint on this is 88 cents. You're not going to get the midpoint. You can just buy the ask if they're not letting you kind of work that order at all. But with us here, we're going to just see if they'll give us 89 cents. And we'll actually just buy one of these. So my quantity is already set to 3 usually, but we'll buy one just to make sure it goes through. And you can see how this goes through. So you usually have a window that pops up that says you want to confirm this order, commissions $1, estimated fees, and then you just send the order. And it bought it. So it was working, it bought it. You can go into positions. You'll see that you now have a Lee open position there that is in your open positions on your whatever platform you're using. Let's see if we can pop up thinkorswim so you can see that. I'm going to try the entire screen again, just because I would like for this to work properly. And yep, all right, it might be working now. So we'll see if it carries over. So same thing here with Liato. You would want to just go over here. And this is an old account that's just sitting in some cash, and it's an old IRA, so it's not being used. So we'll just kind of go through the steps here. Same thing, you would click on the 90 cents here on this ask on expiration of the January 10. And then you would go down here. You'd have your buy, one contract. And you can see here, symbol Lee, January 10, 23 strike, and then call type again. And then you can see it goes straight to market. My suggestion would be to either do market, so you hit the ask, or hit the limit. All right. And then this would be day order. All right. When we want to get out of these positions, it will set a stop limit here. So as well, I'll show you how to do that on both platforms as well. So say we bought this position already and we wanted to set the stop limit at 150%. And we bought that contract, remember, at 89 cents. So simply just use a calculator if you want, and do 89 cents times 2.5. That would be $2.22 and a half. So $2.23 is where you would want to set your limit order to sell on this particular contract. So all you would do is go back over here. You would go into your position, click on your position, click sell, and it would be red on thinkorswim. So you'd want to sell one contract, and it's a call, the 23 and a half strike again, and you'd want to set your limit, right? So you want to set your limit to $2.23. That way you capture that 150% move that we're looking for. And then here's the big one. You want to change your order format from day to good to cancel. That way this holds until expiration. So you'll see that the good to cancel, and I'm going to get rid of my face again so you can see that. Good to cancel right down here on TOS platform. You'll want to hit that so that it holds that, so that anytime that it goes over that $2.23, it's going to sell it at $2.23. Now, right before expiration on Friday, if positions have not hit, we have a 2-hour window that we typically close them. from 2 o'clock Eastern Standard Time to 4 p.m. Eastern Standard Time when the market closes. You would just want to go in, cancel your order, and then you can sell it at market or put a limit order in to work that order in between the bid and the mid prices. So let's just see if we can pull up Tasty Trade so I can show you that as well on that side. Oh, perfect. Opened up. All right. So to do that here, you would just take this lead contract. You would hit close position, right? And then you would come in here. I'm going to hide this on my side. You would come in here. You would want to, let's see if it will work right. All right. So limit down here. And then time in force. Good to cancel. And you'd want to adjust your price. $2.23. So that's when you would sell the contract. As you can see here, this will tell you what your buying power would increase by and what you would receive for sending that order. So send the order. And then in something like this, where we have an open position, you'll see it's a working order. A lot of the times you'll have working orders in another tab like you would on TOS, but right in Tasty, the beauty is they actually have the working order right below the position. You can collapse the window as well. So that is why I use Tasty. I think it's very friendly for option swing trading. But I've been a fan of thinkorswim. I still use it. If you look back on my monitor, all my screens still come from thinkorswim. The founders of Tasty are from thinkorswim as well. So definitely use both accounts. And I know some other traders on our desk use Interactive Brokers. This will all be the same, or Webull, Fidelity. There's a bunch out there, Robinhood. So we can do this again with another one, just so you kind of get the idea of it. And I do see that there is a question here. Do you set a stop loss as well? So on these particular contracts, we don't have a stop loss. These are a 5-day option. The reason why in the money it still doesn't have like a stop loss per se is we're trying to set up these trades. We don't think that we're going to lose more than, even if we let this run into expiration, really more than 50%. We are buying, they're like 80 to 90 deltas in this program. So they're really kind of deep in the money for what that option is. And the reason why we do that is we think that there's some solid support at this level. Yes, you're still every once in a while going to have 100% loss on these, but we're looking at the average losses really around about 50% in the program as a whole. So even though every once in a while we do have a total loss because outside moves happen, that's the beauty of options. We are still not setting a stop loss on these weekly newsletter countdowns because a lot of the times you can kind of get whipped out of the position as well. I literally had a position. It was, I can't remember if it was in the money or if it was expiration week countdown, which is much more aggressive. It's at the money options. But I had a Google contract. Basically, the first day was down 60, 70 percent. So if you would have set your stop loss, say at minus 50% on that, it would have went out for a stop loss. But by Friday, those that were in EWC had a 300% winner for, it was like maybe a 10-20 period, which was our target price. So you hit that 300% winner because you're risking that 100% loss on that type of contract. Now within the money, we position it and we look at how it is from a structural standpoint in the trade, that our overall loss really isn't more than 50%. So we haven't set a stop loss on this program per se yet, just because we kind of place that in there with our trade drivers and the support that we're seeing. But if you are doing another program, right, and you're looking at like one of our other real-time trading services, we do send out stops, and most of the time our stops are between minus 30 and minus 50%. So if you are wanting to trade yourself on something and you're looking at, hey, I'm going to buy this contract, I'm going to buy a 90-day contract out, I would highly suggest, yes, you can set a stop loss. You can set it at minus 30 or minus 50%, somewhere between there, that aligns with the chart as well in support levels. So if you're below a certain level, you can kind of gauge that by using the delta. For every dollar that the stock price moves, the delta price is what you'll lose on your option. All right, let's just do another one here for you guys. CCL. This was a put, so you can kind of see both sides of it. The reason why we liked CCL here is because it was trading below its 10 and 20-day moving averages. As you can see, the trend is still bearish. This has a quarterly volume point of control here at 25.50. There was also large call strikes right at the 25 strike. So right there, 25 and then 27. So if we ended up getting some kind of outside move gap up here, we did think that, hey, you never know, you could kind of get a big wick candle and a pushback down lower. Even though we did tell you the OEZ was 25.50 on that upside, we wouldn't really want you to get in too much more, but we would think, hey, this 27 strike would probably start pressuring price anywhere above that 25.50. So you probably get an entry up above there, even if we had some outside move today. We didn't. We're still below this 50-day moving average. We're still kind of holding below this resistance zone, and then we have these short-term moving averages moving lower. Our real goal here is we want to see a move and stick below this 24.25 level. That's where we think, hey, you can get a move all the way to this gap fill possibly, which would be a big move, and that'd be a 150% winner. But even down to the gap level here, I was looking at options earlier, you're still going to get a 100% winner. So even if you're just get a move down to this 23.5 by expiration, you'd still have a 100% winner. And like I said, you have multiple levels of resistance still here acting. You have that 25 strike, you have the resistance level, and you have those short-term moving averages. So we were going to buy the Carnival Corporation, CCL, January 10, 25.5 strike put. Target price is 150%. Like I said, the OEZ, very similar to Lee, so it's not a typo or anything. It was 23.5 to 25.5. So let's just pull up our brokerage, and don't worry about options as much. You're going to see, they're going to move around a little bit more, right? So it's not like stocks. You got to kind of think it's a very loose term, but for every 1% move is kind of like almost like a 10% move in options, right? So when you do allocate your resources, allocate accordingly. Make sure that, it's a level that you're comfortable with seeing some movement around that says, hey, this option's down 20%, this option's up 80%, where you're not going to get emotional in it. That's how you learn how to trade options, right? Is to be comfortable. So don't over allocate. If you're used to setting 2 to 5% equity allocations into your portfolio, which 5% is pretty decent for anybody that's starting out. Most people don't really exceed 5 to 10% equity allocations in their portfolio. Most of them are usually 1 to 2%. Don't exceed 1% if you're just starting out in options. Just let it kind of work for you. Be calm with it. That way, you're not going to freak out when you do get that 100% loss in an option, right? It's something that your portfolio can handle. It's not going to affect it. General rule of thumb also is just never place like an option trade that's going to take your portfolio down more than 1 to 2% on a whole. So those are just some ideas here. So we'll set CCL here. That was the 25.5 strike. So we'll go back to our trade screen. And as you can see, you have all these expirations here. So you definitely, can do, longer term trades. This is simply an example of in the money trader this week. As you can see here, we have the 25.5 strike call selected for CCL. And we're just going to hit that there so it updates down below. I'll reduce the quantity to 1. This is just kind of a cash account of mine, but I don't mind taking a few trades alongside everyone to show you guys as an example here. So as you can see, 106 to 110 is the bid-ask spread. A lot of the times this is going to be a lot wider on the open as well. So one thing you might want to do on the open is, wait for it to kind of slow down a bit, right? You don't have to put the trade on the first minute. Maybe take a look in that first 10 minutes, look for an opportunity to buy that option. A lot of the times on the open, you're going to get these large swings. Like I believe that Lee Auto option was like, it swung from $1.70 to like 105 right on that first minute candle, right? So you're going to want liquidity, but when you get a lot of volume that comes in that first minute, that bid ask is still very wide from the open. You're going to get kind of some sloppy entries. So there's no rush in getting this in on that first minute. take the first 10 minutes, take the first half hour. You can even go to like noon or even end of day. If you're like, hey, I'm going to buy 5 contracts, feel free to spread them out. If one starts running a lot, you might not want to continue buying, but you might want to just spread it out a little bit throughout time. That way, if you're not buying in that first minute, your bid ask prices start tightening up usually within the first 5 to 10 minutes. So that way you're not getting a sloppy entry as well. And you'll see a lot of our subscribers, some do all enter. You'll see like uh, depending on the service, a surge of volume right on that first minute candle because they're trying to capture if it starts running right away. But I promise if you just look in the first 5 minutes, even if that first candle is very bullish and it runs, you're probably still going to get a similar entry, or you're going to get a little bit of a pullback within that first 10 minutes back to like a moving average on like a smaller time frame that you might want to look at to be able to buy this. And the bid asks will not be as spread out. So the entry will be much cleaner. So, as you can see here, you can work this order most likely. I'm going to guess they'll give us 109 on this contract. We'll just hit review and send, and you'll see your order down here, buying power effect, estimated trade costs. All that's still the same, send, and it fills. So now you have that as well in the positions tab in CCL. So we bought it for 109. You can take out a calculator. I can even maybe pop one up here for you. So just so you can see how I do it. Very simple math. So we bought it for 109. We're just going to want to times 2.5 for 150%. So times 2 would be 100%. 2.5 would be 150%. So that's $2.72 and a half. So what we'll want to do with that position is set it to $2.73 on a good to cancel. So again, it will pop up market. We don't want that. We're going to set a limit. We're going to set time and force to good to cancel. And then we will change the price to $2.73. So it will immediately go off if we hit that target. That way you don't miss target profits either, because sometimes they come out pretty quick. By the time we send the notification, it could have moved as well, depending on the volume that happens at that level. I've seen it many times where it hits the level, and within 5 minutes, it's just the target profit, the volume suppresses that price back down lower, and it may rise back up later on, but this way you don't ever miss it if you set these good to cancel orders. If you do want to know how to set a stop loss as well, we can do that just for fun. I think it will allow me to do it on a similar order here. So let's just come over here. We can hit stop limit. All right. Stop limit is not the same. So the looks like Tasty doesn't actually have stop loss. I just use charts. We can pull up thinkorswim. They should have stop loss. All right. So how you would set it would be, trailing stop or stop, right? So you would hit your stop. It would sell at market if below. So this was bought at what? 223. So this was what? 109.2. Say you wanted to do this and not this example on a short-term option like this, but say it was a longer-term option, 90 days out or something, and you wanted it to be 50% loss on that option. So 109 divided by 2 is 55 cents. So you would just simply set it here on this on the TOS side, hit stop, good to cancel. Again, you want to make sure you have that good to cancel. So then no matter what, it will execute at that. The one problem with setting stops, and I'm going to be, we'll put that out there, is on the open, like I'm talking about those wide bid ask spreads, sometimes they can take you out on that. And the market maker is going to be more than happy to take you out on that. So I am reluctant to set stop losses on a personal level, just because that first minute, especially if the option is not an AMD, an NVIDIA that's super liquid. Li Auto definitely has liquidity, but it's not super liquid. On the closes, in a name like CCL, Li Auto, Core Scientific, so this week's in the money trades, TPR, all of them, you'll see like they will spread out that bid ask. Like TPR is a great example. It went out to $5 on the close on Friday, which that's what we send our recommendations from. But the true ask was really only like in the $3 range. So they spread it out so much that if you bought at that $5, it really reduces your risk reward level to be able to get. And they'll do the same thing on the stop side. So they'll spread that out, $1, $2 wide right on that open or that close, and they can take you out because you have that resting order there. So I do not love stop loss orders. I'd rather have a chart level defined that I'm going to look at, set an alert through the chart. So say, you break above, if this was a longer term option, you break above that 25-50 level, and you're going to get a close up here, you would want to kill that, right? Because now the bearish trend is likely change. What's the other one for this week was cores. So cores, we wanted to buy this, cleared the 10 and 20-day moving average. We'll remove this 50 simple, but it's right at this 50 simple. But the big reason why I'm even going to remove it is just because it really loves this EMA instead, this 50-day EMA. So as you can see, very bullish setup, closed above the hourly pivot. It's been a sloppy trade today. So let's just kind of look at it. As you can see, it's been very choppy, still holding that hourly pivot. No reason not to try to enter this trade here. It's just, a lot of times you kind of get this whipsaw chop, and this is what I'm talking about. You get these outside moves. You can wait. This is a 10-minute chart. As you can see here, you're going to get pullbacks in either direction. So don't worry about that first minute. You can see first minute. We can pull this back. You get a lot of volatility, and you're going to have that bid-ask spread out very wide. Let it kind of come in a little bit. See some consolidation if you wanted. I would use 10-minute charts, so just because 1-minute charts are very noisy, but you're going to get a movement. It's going to come back and forth. I mean, you can see it across the board here. CCL as well. You're going to get the movement. You're going to get a tighter bid-ask spread. You're going to have opportunities. So, all right, let's do cores for the final one. And if you guys have any questions after that, feel free to shoot them over. So cores, again, we're looking at this. 14 strike was a big level that held here. This is why we're buying it. This is why we think, the stop loss, naturally is going to be roughly 50% at the end of the week anyways. Market makers really aren't going to want this to close at 14. They're going to probably want it above that. So the chances are, it's going to not be exactly $14. You're going to have some premium left in this option. And then it cleared the 15 call strike. So we're looking at this as, hey, this is going to be bullish here. It can definitely run, and it can be a big mover. So Cores is like a crypto AI name. It's kind of a blend. So again, OEZ was $14 to $16, well within inside that range here today. So you're able to get into this option. Let's just pull up Cores, and we can put this trade on as well. I should have enough buying power. It's cash account. So, all right, here we go. So the 14 strike for January 10, it's going for $1.49, $1.55 right now. Again, you can buy at market, but it's always a little bit better to try to work the order a little bit. You can try for $1.53. I don't know if they'll give it here. You can see $1.52 is the mid. $1.49 is your ask, or is your bid, and $1.55 is your ask. So let's see if they'll give us $1.53. If not, I'll show you how to quickly. See, now it's a working order. They didn't give it to us. And I did accidentally hit 3 there, so it doesn't really matter. So what we'll do is we'll replace the order, reduce that quantity back to 1, since we're using it as an example. Oh, clear. Oh, we got filled. All right, so whatever. Three contracts, not a big deal. So we got 3 contracts there, eventually filled. So what you would just want to do is replace the order, go up a penny to work that order, so you can get the best available price if the bid asks are spread. If it's really tight, go ahead, hit the ask. Get in that position, hit the market order. So, I mean, it's not that big of a deal if you even did it there. So $1.55 versus $1.53, that's only $2. Not the biggest deal in the world, right? So that's how you open a position. And then we'll just show you cores once again. Close position, just so you're aware of how to do it. Hit limit. So $1.55, bring out your calculator. $1.55 times 2.5, $3.87. So you would want this to go to $3.88 to capture the full move. Or if you want, you can always undercut it a little bit. That's your choice. But I would say good to cancel, limit $3.88. Oh, error code. Something I did wrong there. Limit good to cancel, sell to close. Maybe because there was something not going on there. I don't know. We'll see. $3.88. Two of them cores. We own the position. Yeah, not really sure exactly why it's doing that. So this would be something more on Tasty's end. Again, let's just see if it'll let you do it. So $3.88. Yeah, there's something going on with this specific contract. So you'd have to contact your broker and ask why. If not, go set a price target on your chart. So $3.88 from the 14 strike. You could easily just come in here, set an alert. If you have, it doesn't matter. It could be on thinkorswim or it could be on your broker. But you can add an alert at cores, right? So $17.24. This is deep in the money. So $17.88 would be the value on the stock chart that you would want, because your delta will be about 100% here if this contract hits. As you can see here, your resting alert right here is sitting right there at $17.88. So you need a big move, but this is a name that can obviously make big moves in one day. Very volatile stock. And the reason why, we're looking at these price targets here, we want to make sure you got in, a price target before $18.63. We view that as resistance up here, even $18.25. So you're getting in before any kind of, or getting out before any kind of resistance hit. If price is up here, it's going to act as a magnet, go towards that potential resistance, see if it can break out. So that's why we do it. You'll see that with a lot of our charts. We're trying to hit targets before resistance zones or before potential support zones. So that's how you trade an option. Hopefully I didn't go too high level. Hopefully I kept it simple enough, kind of cover a little bit of what we're seeing here in these recommendations that we do and how to enter it and set those target profit orders. If you do have any questions, feel free to reach out to a Schaeffer's team member at any time. They will gladly help you out. I know John will likely be back next week or the next time one of these events is going on. Again, it was an absolute pleasure to walk through these positions with all of you. If you don't have any other questions, though, that is it for me today then. And we will be signing off. But happy that you're along with the Schaeffer's team. And, if you're not, or if you're looking at some potential problems, we'd love to trade along